Welcome to AGORACOM Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. We've got a stack of press releases hot off the TSX Venture Exchange today. And let me tell you, these are the kind that make investors hit the refresh button on their trading platforms.
Yeah.
We're talking Power Nickel, trading under the symbol PNPN, Quebec Innovative Materials, or QIMC, Intermap IMP, Forum Energy FMC, and Free Gold FVL. Get ready, because we're about to break down some serious market movers.
What's interesting today is the range of sectors these companies represent. We've got everything from critical minerals for the green revolution to groundbreaking clean energy sources.
Let's kick things off with Power Nickel, PNPN. Their headline today screams Power Nickel's Lion Zone, a game changer in nickel copper mining. And boy, does it live up to the hype.
Nickel and copper are the backbone of the electric vehicle revolution, and demand is skyrocketing. Power Nickel's latest drill results suggest they could be sitting on a very significant deposit.
Hole PN 24079 hit 20.05 meters of 4.29% copper equivalent. And that includes a high-grade section of 10.25 meters at a staggering 6.26% copper equivalent. We're also seeing strong numbers for gold, silver, and PGMs in this zone. This is the kind of news that sends shockwaves through the market.
Power Nickel CEO Terry Lynch had this to say: "These results inspire confidence in the Lion Zone's potential. We are on track to deliver a strong resource estimate, with multiple drills working in tandem to expedite exploration efforts."
Next up, we've got Quebec Innovative Materials, QIMC, making waves with a potentially game-changing discovery in the clean energy space. Their headline reads, QIMC announces major natural hydrogen results. High of over 7,000 ppm at 50-meter shallow depth in fault zone amid harsh winter conditions at St. Bruno de Guigues hydrogen project.
Natural hydrogen is emerging as a potential clean energy source, and these findings suggest there could be significant reserves right here in Quebec.
They found an astounding 7,119 ppm of hydrogen at a depth of just 50 meters. Now, to put that into perspective, many experts believe that concentrations above 1,000 ppm could be commercially viable.
QIMC's CEO John Karagianidis seems pretty excited about the implications. He said, "These results represent a pivotal achievement for QIMC and the province of Quebec. Our work accelerates the development of sustainable, clean hydrogen and strengthens our leadership in geologic hydrogen exploration."
Now, let's turn our attention to Intermap, trading as IMP, who just scored a major win in the geospatial intelligence arena. Their headline announces, NGA selects Intermap's team as a vendor for $200 million LunoB IDIQ contract. And this is big news for a company of their size.
Landing a contract with the National Geospatial Intelligence Agency, the NGA, is a huge validation of Intermap's technology and expertise. This could be a real turning point for them.
This contract highlights Intermap's capabilities in AI and geospatial data analytics, a market that's experiencing explosive growth right now.
Intermap's CEO John B. O'Connell had this to say about the deal: "The LunoB contract is a game changer for Intermap, as it not only strengthens our relationship with the U.S. government, but also accelerates our efforts to deliver next-generation geospatial intelligence solutions."
Now, let's shift gears and talk about Forum Energy Metals, or FMC, who are making headlines in the uranium sector. Their press release boldly proclaims, Forum announces drill results from Kavik, 296 meters of uranium mineralization, 8.2 per C U308 over 0.5 meters, and multiple intercepts greater than 1%. These are numbers that uranium investors dream about.
The global demand for uranium is on the rise, and Forum's discovery in the Phelan Basin could position them as a key player in the market.
They hit a massive 296-meter zone of uranium mineralization, including a high-grade section with 8.17% U308. To give you an idea of just how significant that is, many operating uranium mines have grades in the 0.1% to 0.2% range.
Here's what Forum Energy Metals CEO Rick Mazur had to say about their findings. "These exceptional results from our Kavik deposit are in line with what we believe to exist in the Phelan Basin, basement and unconformity contact-type deposits with the same size potential as the Athabasca Basin."
And last but certainly not least, we've got Free Gold Ventures, trading under FVL, making a
significantly increase the value of a project, and Free Gold's findings at their Golden Summit project are definitely turning heads.
They intersected 2.72 grams per ton of gold over a remarkable 139.9 meters. And here's the kicker. They also encountered some ultra-high-grade zones with up to 59.5 grams per ton of gold.
Alvin Jackson, VP of Exploration and Development at Free Gold, weighed in on the results. He said, "The results from our 2024 drilling program not only confirm the significant potential of the Golden Summit project, but also enhance our ability to drive economic studies and feasibility analyses."
So there you have it. 5 companies making waves on the TSX Venture Exchange today, each with the potential to shake things up in their respective industries. But before you rush off to make any investment decisions, remember that this is just the tip of the iceberg. Stay tuned for part 2 of our deep dive, where we'll explore the potential risks and challenges these companies might face, as well as what investors should be looking for before taking the plunge.
Welcome back to AGORACOM Small Cap Breaking News. We just dove into some incredible headlines that are sending ripples through the market now. Let's take a step back and look at the potential challenges these companies might face as they move forward.
Yeah, it's easy to get caught up in the excitement of a big discovery or a major contract win, but seasoned investors know that it's crucial to consider the risks as well. Every opportunity comes with its own set of hurdles.
Exactly. Let's start with Power Nickel. While their drill results from the Lion Zone are incredibly promising, exploration is inherently a risky business.
You're absolutely right. There's no guarantee that the mineralization they've found will continue at depth, or that it will be economically feasible to extract. Plus, they're operating in a competitive market with some well-established players.
Power Nickel seems to be taking a proactive approach to these challenges, though. They're using advanced geophysical tools, like downhole electromagnetic surveys, to get a clearer picture of the deposit. And their location in Quebec, a mining-friendly jurisdiction, gives them a bit of an advantage.
Now let's move on to Quebec Innovative Materials, or QIMC. They've struck what could be a game changer with their natural hydrogen discovery. But this is still a very new field.
That's a key point. The technology for extracting and utilizing natural hydrogen is still evolving. It's one thing to find it, but it's another thing entirely to extract it efficiently and cost-effectively. And then there's the question of scalability. Can they produce enough natural hydrogen to make a real impact on the energy market?
Those are definitely questions that QIMC will need to address as they move forward. However, their collaboration with leading research institutions, like the Institut National de la Recherche Scientifique, or INRS, is a promising sign.
Absolutely. Partnerships like that can play a crucial role in accelerating innovation. Now, how about Intermap? They've landed a dream contract with the NGA, but government contracts can be unpredictable.
That's for sure. Government budgets can change, priorities can shift, and competition is always fierce. Intermap needs to demonstrate that they can consistently deliver on their promises and cultivate a strong, lasting relationship with the NGA.
It all comes down to execution at this point. They need to maintain a laser focus on delivering results and staying ahead of the curve in terms of technology, especially in the rapidly evolving fields of AI and geospatial intelligence.
Let's talk about Forum Energy Metals. They're on the cusp of potentially defining a whole new uranium district in the Thelon Basin, but that's a long and capital-intensive journey.
Resource exploration and development requires a significant amount of upfront investment, especially in remote areas like the Thelon Basin. And they'll have to navigate the regulatory hurdles associated with uranium mining, which can be complex and time-consuming.
Forum seems to understand these challenges. Their CEO, Rick Mazur, has emphasized their focus on building a Tier 1 uranium district, which suggests a long-term vision and a commitment to responsible development. It sounds like they're in it for the long haul.
Now, let's wrap things up with Freegold Ventures. Their drilling results at the Golden Summit project are remarkable, but it's still early days.
High-grade gold intercepts are one thing, but transforming those intercepts into a profitable mine is a whole other ballgame. They still need to complete a feasibility study, secure financing, and obtain all the necessary permits. That's a lot to accomplish.
And they can't overlook the environmental and social impacts of their operations, especially in a sensitive area like Alaska. Striking that balance is crucial for long-term success.
Freegold seems to be taking a comprehensive approach, though. They're not just focused on extracting gold, they're also conducting environmental and cultural studies, which suggests that they're taking a more holistic view of the project.
It's definitely encouraging to see them factoring sustainability into their plans. So, what does all of this mean for investors who are listening?
It means that due diligence is absolutely essential. Don't just jump on the bandwagon because a company had a good day on the market. Take the time to thoroughly research the company, understand their business model, and carefully consider the risks involved. Investing in small caps requires careful consideration.
Couldn't agree more. These 5 companies all have the potential to deliver substantial returns, but there are no guarantees in the world of small caps. Investing in this space requires a certain level of risk tolerance and a willingness to do your homework.
And with that, folks, we've covered the potential risks and challenges facing our 5 featured companies. But hold on tight. In part 3 of our AGORACOM Small Cap Breaking News Deep Dive, we'll be shifting our focus to what investors should be looking for when evaluating these companies and what questions they should be asking before making any investment decisions. You won't want to miss it. Welcome back to AGORACOM Small Cap Breaking News for part 3 of our deep dive. We've explored the headlines that have investors buzzing. We dug into some of the potential risks and challenges these companies might face. Now, let's get down to the nitty-gritty. What should you as an investor be looking for when evaluating these companies?
This is where the real work begins. It's time to go beyond the hype and dig into the details that really matter. We're talking about the factors that separate the contenders from the pretenders in the world of small caps.
So where should we start? What are the key things investors should be focusing on?
First and foremost, take a close look at the management team. Experience matters. Do they have a proven track record of success in the industry? Are they transparent in their communications, and do they hold themselves accountable for results? A strong management team can be the difference between a company that thrives and one that flounders.
That makes a lot of sense. A company's leadership can really set the tone for everything they do. What else should we be considering?
Next, you want to scrutinize the company's financials. What's their cash burn rate? How quickly are they spending their available capital? How much debt are they carrying? Are they generating revenue? And if so, is it growing? Are they consistently meeting their stated milestones? These are all critical questions that investors need to ask.
You're right. The numbers don't lie. You want to make sure the company is financially sound and has a realistic path to profitability. What about the company's technology or project itself? What should investors be looking for there?
That's where you need to assess their competitive edge. Is their technology or project truly innovative? Does it offer a unique solution or advantage in the market? Is there a clear and demonstrable demand for what they're offering? You don't want to invest in a company that's simply trying to imitate existing players. Look for companies that are pushing the boundaries and disrupting their industries with fresh ideas and approaches.
I see what you mean. Innovation is key in the fast-paced world of small caps. Are there any other external factors investors should be considering?
Absolutely. It's crucial to examine the regulatory environment the company operates in. Are there any potential roadblocks or hurdles they might encounter? For example, permitting can be a major obstacle for mining companies. And for companies working with emerging technologies like QIMC and their natural hydrogen project, there might be regulatory uncertainties that need to be clarified.
That's a great point. Regulations can significantly impact a company's ability to execute its plans. What about the importance of partnerships and collaborations?
Strategic partnerships can be a game changer for small caps. Look for companies that are actively collaborating with reputable institutions or industry leaders. These partnerships can provide access to funding, expertise, technology, and markets that a small company might not be able to secure on its own.
So, partnerships can give them a real boost. Anything else investors should keep in mind?
Don't forget to zoom out and consider the broader context. What are the macro trends shaping the industry the company operates in? Is the company well positioned to capitalize on these trends, for instance? The demand for critical minerals is only going to intensify as the world transitions to a cleaner energy future. Companies like Power Nickel, who are developing nickel and copper projects, are strategically positioned to benefit from this global shift.
That's a great reminder to look beyond the immediate details and consider the bigger picture. So, to recap, investors need to conduct thorough due diligence. That means scrutinizing the management team, analyzing the financials, evaluating the technology or project, assessing the regulatory environment, looking for strategic partnerships, and understanding the macro trends that are shaping the playing field.
Exactly. Knowledge is power. The more informed you are as an investor, the better decisions you'll make. And remember, investing in small caps comes with inherent risks. Never invest more than you can afford to lose. And if you're ever unsure, consult with a financial advisor to get personalized guidance.
That wraps up our AGORACOM Small Cap Breaking News Deep Dive. We've taken you from the attention-grabbing headlines to the potential risks and challenges, and finally, to the key factors investors should be evaluating.
It's been an exciting exploration of the world of small caps, but keep in mind, we've only scratched the surface. These are just 5 companies out of thousands that are listed on the TSX Venture Exchange. There's a whole universe of opportunities out there waiting to be discovered.
So stay curious, keep your eyes peeled for emerging trends, do your research, and never stop learning. The world of small caps is dynamic, ever-evolving, and full of surprises. Who knows what game-changing discoveries or innovations await us just around the corner?
Happy investing, everyone.
And thanks for joining us on AGORACOM Small Cap Breaking News.